So the stock market is still in a pretty shitty position here. So it ended on Friday being rejected again by the 55-day exponential moving average. So we have a breaking of key support here. However, in the past, when we've broken the 55, as you can see here, and there's like about two other examples, not on this screenshot, it does recover back above the 55-day EMA. And there is a fair value gap, as you can see from this blank candle here, from Thursday's daily candle print. So maybe the stock market, rallying off of the good CPI inflation report, does come back up and fill this fair value gap, and we're above support again, and maybe things are fine. However, our momentum is bearish on our Moxie indicator, and our stochastic RSI shows more room to the downside before we are getting into oversold territory. And when we really zoom out, like we've been pointing out, this is a clear rounding over of bullish momentum towards potential bearish momentum. We don't have it yet. We haven't fully broken, but we're still looking for at least a 6% fall in the stock market if the 55-day EMA holds as resistance. Falling to the 200 EMA is what we would expect, and then we have a bunch of gaps on the chart here. So the stock market's in a very fragile position heading into Tuesday, because the stock market, the traditional markets, will be closed on Monday, as it is a holiday here in the United States. So anyway, just a quick update on that. We'll be paying attention to the S&P 500 in the stock market as we head into next week to see if we can recover above the 55-day EMA or if it holds as resistance, and we are about to have the first sizable correction we've had in about a year in the stock market, which was back over here, and maybe even a bigger correction. We'll have to see.